Good afternoon and welcome to the American Bankers Association webinar in conjunction with Lenders Cooperative. The title of our webinar today is Why SBA Lending Should Be Strategic. My name is Tim Pinnell, Vice President of the ABA's Partner Network and Member Engagement. We'll get started in just a moment on this program discussing why SBA lending should be strategic, but before we begin today's program, let me run through a few administrative issues. This webinar will run approximately 45 minutes to an hour. If you have any questions at any point, please send them using the Q&A area on the right of your screen. We will answer the questions from the audience at the end of today's webinar. Also, in the coming days, in a follow-up email, we will be distributing a link to a recording of the webinar to all attendees. We are very thankful today to have our premier partner, Lenders Cooperative, join us. I'm excited at this point to turn it over to Chris McClinton, President of Lenders Cooperative, who will tell us more about lenders and moderate our session today. Chris, it's all yours.
I appreciate that, Tim, and I appreciate all the folks at the ABA very much. And I'm really pleased to have this next short while to share with you a conversation that I get to have with our very own David Tensley, who is the head of SBA LSP services at Lenders Cooperative. We're going to learn all about what that entails over the next short while. David, good to see you. Thanks for being here.
Thank you. Happy to be here.
Well, I thought that just the topic that ABA landed on for the webinar was a really good one. And so let's start, if it's all right, just with that high-level question. Why is SBA lending, why should it be considered a strategic initiative for lenders today?
Yeah, so, I mean, the fact is, there's a number of reasons, and I would happily go through and you know, I'm one of those people that would talk about SBA until everyone asked me to stop talking. So that's not generally a problem there, but I'll break it down to just a few kind of key points. I think first and foremost, when it comes to lending, it all boils down to risk management. And I worked for a director years ago when I had started, and he was very fond of saying that we were in the business of managing risk and not avoiding it. You know, if you don't want to take, you know, don't make loans, there's no risk, right? And that was sort of the approach to it. So it was always important to remember that it was about that management approach. And the thing is, managing that expected loss is part of the entire lending process. And the SBA guarantee, it just gives you a direct way to impact that bottom line. So all of the risk models, all the approaches that you take, it doesn't change the fundamentals, sort of those 5 C's of credit, how that works. What the SBA guarantee does is allows you to impact some of the C's that would often result in a business that you would like to do business with, that you would like to lend to them, but they're just a little bit outside probably the comfort zone of your risk managers. And so what happens is that it takes the amount of that loan that was at risk, or what we call the loss given default, right? It reduces it to a fraction of what it would have been otherwise. And that's all because of the SBA partnering with you as the bank in guaranteeing that outstanding loan amount. And that's really what it boils down to. So it's not a radical different way of lending. It's just an extra tool for that toolbox. And really, like I said, this allows banks to support businesses that are probably already depository customers, and you otherwise would not have been able to fit them in that conventional credit policy. And it might have been because of a collateral shortfall. It might be that they had, you know, limited time operating in their own business, or maybe the industry itself is something that's just a bit higher risk than you were otherwise comfortable with. And so all of those things add up together to something that it lets you better manage from a risk balanced approach perspective when you're lending. And that's just one. I mean, the fact is CRA is a big deal, like getting CRA credit for the bank. And the thing, SBA loans by their design, they are pretty much in direct alignment with the CRA goals that you already have. So they often will, just by virtue of following SBA's rules, they will qualify for that CRA credit. And one of the ways they do that is that it gives you the ability to document community impact, right? So when you report your SBA loans as part of the CRA exam, you have measurable and trackable outcomes that you can point to. So like as part of it, you can indicate that you've created this many jobs, you've retained this many jobs as well. You can show how you've improved or grown a business in an economic area. And in many of those cases, as part of that collection, you're able to show that it's in an underdeveloped or an underserved area as well. So at the end of the day, what's happening is that you're getting credit for us on your CRA exam for something you were doing anyway. So it's like, what better way than to kind of be more efficient for just simply, this is a strategic program. It works well with your lending program. Oh, and as an added benefit, you might get CRA credit for these as well. So that's, a free win is always nice, in that regard. And also when the CRA, when that CRA exam is occurring, the examiners, they like what you're doing for obvious reasons, right? The SBA program aligns closely with theirs. So it's almost yep, they're already doing this, that this is probably a good community impact that we'll be able to see. And another item is that it helps with producing income for the bank. So you have an active and very liquid secondary market. So you have the ability to sell these guaranteed portions on these loans. Is the part that's SBA backed, you can sell off, and you can be able to take what would otherwise, take the life of the loan to be able to fully realize. You can bring that income all the way forward on the loan, and but you don't give up the relationship. You still service that loan. From the borrower's perspective, you're still their bank. So there's nothing that's messing that up or causing it to be awkward for them. But you're getting the benefit of all of that revenue up front. And then another part of it is that it can help you manage your portfolio. So obviously the guarantee impacts how much you have to reserve, right? Because essentially that piece is not at risk. But having the ability to pull additional revenue forward means that you can also balance out what you want to hold as a growing asset. You can sell to manage your capital ratios, or you can mix both, whatever is the most appropriate under the circumstances. So really, it's just it gives your management levers to be able to use to help grow the balances, or manage that bottom line as they need to.
Okay, so there you have four really clear reasons why this should be strategic. And I know people hear that word strategic a lot. It gets used sometimes quite liberally, but that's a really solid business case that you've just laid out, from having a risk balanced approach to lending to the CRA. And I know, all the financial institutions have the requirements to meet around CRA. But, as you were saying that, it occurs to me that there are certain types of financial institutions that, like CDFIs, for instance, where that is absolutely the mission, right? To get to the small businesses that may not otherwise qualify just because they, they don't have what might be sort of that traditional, whether it's collateral, time in business, or what have you. And then on the question of income producing, I mean, all the time the financial institutions are looking for, like, well, obviously, our bread and butter is lending. We're a financial institution, a bank, a credit union, whatever the case may be. But they're all looking for non-interest income. And, the way you described that, like, make a loan, make it according to, the SBA SOP, and you get the ability to immediately pull forward those earnings. I mean, that's very compelling. And then you have that balance sheet flexibility open and available again to go and rinse and repeat. And then finally, what you're talking about around, really, it's like a sort of a tool for liquidity management. Just between, as you said, sort of the combination of having the access to the secondary markets, really well-established secondary markets, and then no obligation. If you want, you have the ability, you have the option to sell the guaranteed portion of the loan. But if it's in your interest, to hold it for some time, to hold it in perpetuity, that's up to you as well. So again, I think those things all taken together, to me, that sounds strategic. So thanks for that. So yeah, I guess that might sort of beg. Go ahead.
Yeah, let me share. So the other part of it is that all those are good high level. I mean, those examples it's true from the management perspective, but what I will say, there's also truly, for lack of a better word, it's meaningful to be able to participate in this. I used to always make the joke that I think it's attributed to Bob Hope. You've probably heard me say it before, but a bank, I believe a bank is a place that will lend you money only after you prove to them you don't need it, right? And that is one of those things that there is something, I would call it rewarding. It is interesting to talk to the entrepreneurs, to be able to partner with people that are in your local market, that you see this idea. If you attach it to what you would call the American dream or whatever, it's someone with I started in the garage and you're helping them get to a storefront, right? You're helping them expand to multiple locations or expand a whole other product line, or you're starting a second shift because the demand is so high because they're building this product that everybody wants around them. It's things that you get to see very tangible ways in your own community. That, let's face it, if the bank was able to easily do that already, they would be doing it, and they're not. So this is that vehicle that lets you kind of bridge that gap today. And to me, don't let that get lost either. There's something truly rewarding about that piece of it.
Okay, so it sounds very strategic, very compelling. Why isn't everybody doing it? Like, what are there's got to be something, right? What are the roadblocks? What are whether perceived or real, right? So
right. So several ways to look at that as well. But part of it is that if you're going to ask the government to write you a check, of course there's going to be strings attached to it, because you got to do it. If they're the ones that are saying, I agree to do this, there's going to be a list of rules they're going to give you that you make sure you have to follow. Now, as I said before, it's not radically different than what you would consider standard lending, but there are some unique rules that they've applied, and that kind of gets me to my number one. The reason most banks aren't doing this is because they lack the specialized underwriting, closing, or operations expertise when it comes down to it. And like I said, while these rules, they're not always intuitive, even though I said they're not radically different, they are a little bit different from conventional lending. And they're more subtle than you would think. And so let's break it down to, if you're looking at a smaller bank, it may be that they just don't have the staff with the SBA knowledge inside. And so the fact is, in the SBA industry, if we call it that, of the lenders out there that are doing SBA loans, well more than 2/3 of those lenders do 10 loans or less. Right. So if you think on average you're doing maybe one every other month, and I'm telling you there's a lot of interesting, unique, and different rules, that would probably be one of those things you'd have to dust off the notebook every single time to go back and say, let's see, how do I have to treat this? What do I do there? And when you realize that notebook currently has 467 pages in it just to originate the loan, I can see why it's like, man, I don't know if I want to take that risk. That might be overly burdensome. That might be difficult to do that. So that's the fact of it. From a small bank's perspective, you probably don't have a large institutional knowledge bench strength there involved. Now, on the larger side of things, if the SBA program is good, and because I made the comment there, only 1/3 of the lenders in the industry are actually doing more than 10 loans a year. Well, if they're doing that well and it becomes a strategic initiative, what you might struggle with there is, how do you scale quickly? Because I just told you there's not that many people that do this, and you need to have expertise. So both of them is that it might be there's a need, and it might be hard to come by those people with that unique skill set. All right, but that's one thing. Having the people to do the loan is one thing, but sometimes it's more perception and reality when it comes to this assumption of complexity to it. And I know you tell a banker, here, we can probably get this done, but go do it this other special way. All they hear is more paperwork, right? And that does check out to some extent. There are some extra things that need to be done there, but the truth of it is that it's manageable, right? If you have the right processes in place, if you have the right support, you can completely manage something well. And there's a difference between something that's extensive but not necessarily overly complex, right? I might tell you this journey takes 50 steps, but that doesn't mean it's straight up a wall or straight up a very steep mountain. It might be an easy field and a nice walk in the process. But that perception still deters a lot of lenders from stepping into it. And then part of it could simply be, I know someone who said they did this before and they had a really bad experience. And that carries a long way. I mean, the fact is you trust the people that you work with, and they tell you, I would never do that again because of some bad experience, or whatever the case may be. That could be something that really gets in the way of you being willing to step out and take that risk on it. And then
Well, I know from your personal experience and just the arc of it, you've probably had an opportunity to see, because I hear you saying there's process here to follow, and SBA lending has been around for quite some time, and I think long enough for there to have been a period of time when it was very manual and lots of Excel spreadsheets and pen and paper.
That's right.
But technology has come along, platforms have come along that really cater to that process and to those requirements and to those timelines, that can take something that might have been once, sort of very intensive, manual intensive, to being a highly automated workflow. I know that you've seen that in your career, and you're certainly seeing it here at Lenders Cooperative. But it's interesting that if there's trepidation, it's because without the right technology, to make sure that the origination is done correctly and the servicing critically is done correctly.
That's right.
Yeah, I get it. I understand what might be the reluctance to jump in and scale.
Well, if you, especially, I talked about a lack of expertise and whatever, it might be a difference in tools. And so all of those things need to fit together in order to make something like that work. And so the example there is that I know that I need to take steps 1 through 10. But then if technology is being introduced in such a way as to make it so that, okay, so now steps 3 through 6 are combined, they do this, there's going to still be that trepidation that you talked about. Well, I know that when I was in step 3, I also did this other thing. Is that also getting done now? Or do I now need to remember? Is that a memory hook I have to have? Or am I literally resorting to a sheet of paper over here to check off as I go through because I don't trust what I'm working on? Is it going to cover all the points that I need to, right? And that doesn't even weigh into, on average with a bank's lending program, and this is not going to be true across the board, but usually your small business lending is probably going to be 15 to 20% SBA if that's truly something you're taking strategic. Because the majority of your efforts it's not just about, I'm going to lend to businesses who haven't had business loans before. It's sort of I'm going to lend to businesses as they're growing up, as they're maturing and sort of graduating out of these additional needs. They grow into larger relationships with your lending institution. And so they naturally they have a need now, but 3 years from now, they may not have that same need. It may be the sort of thing that you don't need to rely on the SBA guarantee. You've seen that they've established themselves in the space. You see their income taken off. And so it doesn't need to remain the only way. So in your mind, it's not a separate set of customers, right? It's almost a channel or a funnel that they're flowing through for it. But that doesn't change the fact that if you decide to make this loan for 10 years, you're sort of committing to, I'm going to be a good steward with the program that SBA gave me, and that's servicing. If I say I'm going to, if I'm going to do the loan, and I'm saying I'm going to do a site visit every year. If I say that I'm going to monitor this credit in the following way, you kind of own up. It's not just you and the bank internally making that strategic decision. You're committing to SBA in the same way, that I'm going to do this and be a good steward because it's their money, as more so than it is your own, that's at risk. And so that fear is a very real thing as well, because obviously what we've talked about up to this point is what happens if you do it correctly. But if you do it wrong, there's impact. SBA might come in and say, you were supposed to do this. Like maybe it's having to do with a piece of collateral. If you didn't appropriately monitor it, if something happened and that was sold out from under you and the reasonable steps you should have taken weren't, and they determine, okay, wait, you've just impacted us, you would be looking at something that they call a repair, which is a nice sounding word, but it's not nice because it means they're gonna change how much they're gonna pay you back because they feel like that's money you should have been able to collect, right? And so, and that's a whole separate SOP I just talked about, the pulling out that particular notebook. And so they, again, it doesn't have to be something that is scary if you're putting processes and people in place to make sure that you're just doing what really it boils down to. Most people, if you sat down, or when I say leadership of banks, if you sat down and asked them what is reasonable and what is prudent, it would probably fall about 90% in line. It's probably a good idea to keep an eye on the loan. That would be, okay, that's going to be what they require as well. So again, none of this is radical. But the difference is it's not just you on the line, it's the government as well. And so you owe them that same level of due diligence is the key.
So obviously Lenders Cooperative is a platform provider for the entirety of the loan life cycle. But we bring something to that that is referred to as LSP. And maybe you could talk for a minute about, first, just so that the audience, for those who may not know, they're clear on that. How does that assuage some of the concerns or the anxiety associated with, hey, I'm not sure that I have this expertise, this underwriting expertise in-house, this processing, this closing,
Yeah, so the fact is, if you understand there's something unique to it, let's say that I decide as a bank I want to pursue an SBA program. I probably need somebody who's overseeing the whole thing. So they need to have a pretty good mindset in terms of skill set there to be able to look at it and say, yes, this is how an SBA program should be run. Then at the same time, you're probably looking at, I need an underwriter so that they know how to do the credit piece of this, do the analysis, pull that together. I need somebody who can handle the packaging and just sort of file movement and processing of that loan. And then at the same time, I'm gonna need some sort of a closer. And then I get into the situation of like, well, if I only have one, what happens if they're out sick or they're on vacation when I got a loan? So it's really a good idea to have backup for each one of those roles. And then, okay, but wait, when I make those loans and I'm going to go service them, who knows about the specialized reporting that has to be done? And if you're keeping track, I'm at something like 8 people already that you would need. And I just told you 2/3 of the lenders out there do 10 or less a year, right? And so that is where an LSP, or that's a lender service provider, comes into play. And it's where I have a strategic interest in our market or in our footprint that we want to do SBA lending, but there's not going to be enough volume, at least initially, to justify that many people. And so so you have two choices. You can try to invest in from an educational standpoint, talking to other people that are in other roles that are split focused, and you can say, I would like you to also learn this SBA piece. And it's not that can't be done. It's very difficult because if you know what it's like to have to remember 2 or 3 different sets of things that are contradictory, that they don't quite align with each other. And again, if you're only doing so many per year, what ends up happening is that they're dusting out that book each time. So it's incredibly inefficient. And not every person is going to be able to be successful in that type of role where I'm having to remember all these different types of programs. However, what really boils down to is I just need an underwriter to do this one loan this month. Right? I just need a closer to do this one loan this month at this time, and so on. And that's where working with someone like an LSP, which is what we're able to bring to the table, is that I have that team of underwriters. I have a team of closers. I have a team of people who can process these loans and monitor. We have a whole team of servicing people. And so what it boils down to is that you get access to that fractional expertise, right? Without having to manage or figure out the administrative piece of that, or worse, have to chase an expense line that your revenue is constantly behind as you're trying to build the department up to that break even. And so it immediately allows you to be able to rely on people who know what they're doing, because that's all they do. They focus on SBA loans. They know them better than anyone else. But at the same time, you're able to do that. And okay, so you're perhaps in the black right away at the start. You're not having to chase something to get to break even that entire time. So for something like a small bank, it fills that entire expertise gap that we already talked about, right? So they can start up something right there at Fresh and support something that they never intend to grow out of. Perhaps 10 a year is the goal, but from a larger lender's perspective, we also talked about it kind of supplements that staff during, if it's an initiative you want to start, same concept, you still have to get there, but perhaps for that large bank, they can get to that 10 loans, that 20 loans in a 3-month time period, and that justifies what they needed to grow the department. That's what an LSP can help you with. It can help bridge those gaps for you. And then also, don't forget, it provides a layer of oversight. The other benefit you have is that you might bring in someone who knows SBA well enough to be dangerous. And all of us, there's always that fear. It gives you somebody else that you can bounce those ideas off of. We're seeing this day in and day out. So in a sense, we have a combination of, don't worry, I've seen this structure before, here's how we handled it. Or at the same time, we're like, hey, SBA is changing how they're looking at these as a result of the most recent SAP that's only a couple of months out, right? It's only been from the time that it was issued, like literally at the beginning of June. So how did these changes come into play? How is SBA viewing this new wording that they required? It's that sort of thing. So it gives you a combination of experience and up-to-date information. And I like to compare it to, I don't know if you've ever tried to put together a piece of furniture, that you've ordered and you've got all the pieces that are together. The instructions are a little bit confusing, and for whatever reason, you can't find the little L bracket that's supposed to go with it that fits every one of those screws. It can be infuriating. So you're either left with, I have one of these left over somewhere, I've done this before, call somebody out to figure it out, or it's like I have a bench full of tools, one of these will work for it. If you're that lucky, if you have all that expertise, then this is not a problem. But if you have to phone a friend or bring someone in, that's what it is. You can either be very, very frustrated with the process you're dealing with, or you can bring in somebody who has the extra tools that can help you. That's what the LSP is for you. It's there to help you get done. It's not take over what you're doing. You have a purpose. You've got a goal. They can assist you in that, and that's your superpower.
And nor is it taking the ultimate lending decision whether to lend or not to a given applicant away from the lender. It's all of the activity to put them in the best possible position to make a really good decision on each individual applicant. It's been interesting for me because I've been in this world as it pertains to LSP, and for not too long, but long enough to see that there's interest both from like on both ends of the spectrum, if you will. So banks that might be on the smaller end for all the reasons that you just provided. But also from some of the largest institutions by asset size in the country, who look at our platform and they say, "Wow, this is super. Looks like we can, our team can do all that they need to do here. We can really scale our operations." But what's that thing over there that you have? You have your own team of like lifelong practitioners in underwriting, processing, closing, and so. Maybe like, what's your view on why do both the small and the large banks find that to be appealing?
Yeah. So on the small end of those things, I kind of hinted at it several times already, because it does come down to staff expertise is what is really the heart of what SBA does. But it's more than that, because it's a, number one, like I said, you're not giving away oversight for your program. So you are able to bring in a figurehead for a program like that to be able to say, this is what we're going to do. It's going to be a strategic initiative. And what ends up happening there is that the goal of especially on the smaller bank, is typically they're far more community focused because they're there. It's one of those, like, people a lot of times, and I can speak to my own parents, that, they know the teller in the bank that they see every week when they go by and make the deposit. It's one of those, the kids play on the same ball team. You might sing in the same choir. You run into them in the grocery store. There's a very different mindset at the community level when it comes to a smaller lender. And I know I'm generalizing and it's not true across the board, but that is what local small businesses tend to cherish. And so the fact is, they're going to walk in to that branch and they're going to ask you, "Hey, I've been running this business. I need funding to do this. And my question is, what are you telling me?" Is the answer is, "Sorry, we don't really have that." So what are they going to do? Well, they're going to go online and they're going to search, how do I get a small business loan? And there's plenty of online lenders who are not regulated the same way you are, who are not under the same constraints, who will happily tell them, "Sure, give me all this information. You'll have $30,000 within 24 hours or something." And they have no clue the fees that are going to be tacked onto that, what that's going to cost them. And I'm not trying to show just a dire situation, because those types of lenders have a place, and it can be strategic in the growth plan for what you're doing. But more often than not, you find yourself later talking to the business owner, asking, "How in the heck do I get out of this? Like, I found myself in this scenario, and I don't love it." And so what I'm saying is that it changes that conversation. It gives you the ability to come in and say, "Yeah, let's look at that about making a small business loan for you." And it lets you get from that no to a yes a lot quicker from as an institution. It's like, I need one person keeping an eye on this whole thing. And then I know that the process can be a simple matter of, let's send them over. It'll be underwritten. I know it'll be closed. I know it's going to follow the rules that we're having. And when we rely on it, I know it's going to be serviced appropriately. And better yet, I'm able to look at my client in my community and say yes to them when I couldn't have before. I mean, so from the small lender level, that's the story I hear. Now, when you flip it on the other end of that and you look at these large lenders, I mean, they probably do SBA today. They probably have people on staff. And so the question is, what is it that, like, the help? Why are they interested in that? And yet they are using LSPs. And it's because it's a unique tool within their toolbox that lets them start up. I mentioned that it could be an accelerator. And that is the truth of it. So what was the story? It was years ago that it was talking about the fact that when, I don't know, there was Delta or American Airlines, who it was, but they had removed one olive, right, from the first class salad or something. And it ended up being a reduction in cost of over $45,000 or something like that. It's where a large lender can make a very small tweak to a program, and it results in a massive impact just by sheer unit count, right? And so a lot of times when a larger lender is looking at something like that, it's going to be what if we offered this lending program to this industry? What if we opened this up as a strategic initiative? And the concern is, I could have 2 applications, or I could have 50, I could have 100. What do I, not knowing how to staff that, it gives you that ability to pull in some expertise to kind of back you up. And if that volume's there, they can help you ramp that up until you either stabilize it or realize, this is how many people I need in place as I continue to grow it. Otherwise, you're just left with, I started something that I can't finish. And I mean, we're seeing more and more where it sort of creates that ready launch pad, right, for a strategic SBA goal versus I'm just trying to start up a program altogether. Again, high level there, we've got a lot closer pulse. Somebody who does SBA day in and day out has a lot closer pulse on what SBA is doing. We're probably just eating that up day in and day out, seeing what announcements have been made, how SOP is changing, looking at all the different ways that SBA is responding to lenders as they're trying to take advantage. And I mean that positively, not manipulate anything, but I mean, while they're really trying to be intentional about, SBA says, we want you to do this. How is that being done? How is it being applied? I mean, all of that comes together, and that's both small and large lenders are benefiting there.
Yeah, that is a good point. In fact, just 2 months ago, there were some very impactful changes to the SBA SOP. And I think, because of our LSP team being so tuned into that, we were responding just in time with SBA as that was coming out. So that could benefit, the large bank lender just as well as the small bank lender. And what's been interesting to me, some of the largest banks that we've deployed just over the last couple of months have been very candid about their intentions in terms of, we're rolling out the platform. We actually got, we're pretty well staffed on our side in terms of underwriters. And however, we view your LSP team as an extension of ours for the next 3 to 5 months. And so when you use that term accelerator, that's exactly what that is. Like, our ramp is going to be just that, like truly a ramp period. So we come out of the gates really moving quickly, and then with every intention to bring it back in house when they're ready to do that. So that's been, I think, a real interesting development. So this combination of tech and talent, like, is that the formula for scale?
Well, absolutely. What I can say is that it's almost like you can liken it to if you had a vehicle, right? You can have the fanciest car there is. If it doesn't have an engine in it, you're not going to get very far. And in the same way, if you could have the best engine out there, if it's not in a vehicle, it's not serving its purpose. Right. And so it's all of that has to come together. And I am viewing tech and talent like that together. Your tech is probably the car. Your engine is the people. That's what gets you done. That's what kind of puts all this together for you. And really what it comes down to is you have to look at it from the perspective of the loan life cycle. So I would say in the old way, and by old way, that's not even that many years ago, I'm embarrassed to say how far tech has come in such a short time period. On average, an SBA loan, information would have been entered about 7 times to keep track of that. And I'm saying that's starting from the customer providing information to the bank receiving it, and all the different systems that didn't talk to each other internal, including SBA's own system, which is, that E-Tran, where it's put together, and then how documents are prepared. 7 different times. So you think about the ways that errors could be entered just from a duplication effort by accident. The best well-intentioned person, if you have to do something 7 times, much higher likelihood you're going to make a mistake than if you just had to do it the one time. So if tech is enabling a workflow for you, what that means is the borrower data, the documents that you're receiving or preparing yourself, or the SBA forms themselves, they all live in one place. There's one source of truth to all of it. And obviously, just simply looking at that, not having to do things multiple times means doing something 3 times versus 1. Clearly, the 1 time is far more efficient, right? And so, and something else to think about, if you have a tech platform that both your staff internally and your LSP, if they share that same platform, you're literally looking at the same work, right? There's definite continuity that you can bring in there. And so you're not losing information. You're not worried about, did I communicate that effectively? You're both looking at the same thing. And so call it whatever you want. You're reading from the same, piece of music or whatever. But the reality is that's sort of non-debatable. That's obvious. Yes, that would clearly be better, to do it that way. And not just efficiency, not just ease of communication, but there's something to be saying for, if the tool is designed to do something intentionally, then it's probably gonna be far easier to do that thing. right? And so the concern that we kind of started with, why aren't more lenders doing this? There's a concern over compliance. Am I following the rules the way I'm supposed to? An LSP can help you with that, but that doesn't necessarily make the internal things you're not relying on the LSP to do. That doesn't necessarily make them easier. Or it feels like you're sort of crippling the process to the point that you're having to go back and saying, I feel like I'm handicapped here, that I'm having to be reminded, am I doing this correctly? Is this being, and it can be a freeing thing to go back. Oh wait, so this tech was built on purpose. It was built to take me through the process of doing an SBA loan intentionally, start to finish. And that built-in logic, it enforces the SOP, right? It's making you do the eligibility checks. It's preparing the documents for you to make sure that when you get to the end of it, you were where you were supposed to be and how you wanted to. Is it impossible to make a mistake there? No. I mean, no matter how many safeguards you put in place, someone could probably find a way to do something wrong. But when the easiest path is the right path, it's a lot more often you'll get it right? And so it's just, obviously something built on purpose reduces the human error that we would see, and it just helps you feel more confident in the process. If you're confident, you'll lean into it. And if you're doing that, you're going to do more, you'll probably do it faster, and you're going to have more of an impact overall. And that's just, from my perspective, that's the magic.
Yeah, that's a really good point. I guess it seems probably really obvious, but like whether it's in an underwriting exercise or whether it's in any endeavor where some degree of collaboration is required, you can quickly imagine like how much more effective and successful two teams are going to be at that if they're using the same machinery. I'm not sure that that's happening in all cases with all platform providers and LSP providers. It's in fact, it's not. But with Lenders Cooperative, it's like our clients are using a platform, and our team is using the very same platform. So you're seeing the same progression of the files, of the loans, of the document exchange, and that really contributes to our success in that regard. And that whole, I guess, notion of just that sort of continuity, it makes my mind go right away to just a game-changing development that Lenders Cooperative is bringing to market as a result of an acquisition at the beginning of this year. Of course, I'm referring to Ventures Lending Technologies, but Lenders Cooperative began as an LOS and facilitating lending initially in SBA, which is a pretty tough place to cut your teeth, if you will, as you've kind of laid out. But kind of once you nail that, originating conventional loans is almost an exercise in paring down or paring back, to a degree. But facilitating the entire spectrum of loans, whether it's SBA or conventional, large or small. But the really important thing that occurred at the beginning of this year, and the work that has been underway since, is to unify that experience in terms of origination and servicing. And that's what's happening now. And it hasn't happened before, such that there's been a platform that is the entirety of the loan lifecycle, from the application intake to all of the steps of origination, underwriting, processing, closing, and critically now to be connected to the servicing life of that loan. Is going to, I started this by thinking of that word continuity, but you spend some time in this and you realize how important that connection is. Not an integration. We've been integrated. Our LOS has been integrated to Ventures for several years very tightly, but when it becomes actually the same platform, and that experience, whether initially for the borrower through the borrower portal, but for the back office and the lenders, they have a team that's working on origination activities. They have a team that's working on servicing activities, and they're in the same platform. And you could just start immediately to think of all of the things that makes them just immediately helpful. Like, well, I got to do a modification or a renewal. Well, you don't have to go far. You don't have to go to some system that has zero, it's kind of siloed and dormant and another vendor has provided it. I mean, what else, just in your mind, how does that change the game in your mind, given what has been your experience watching this process for so long?
Yeah. I will say this, and I'll either step on some toes or other people will be like, that's exactly how I feel. But the fact is, when it comes to lending processes, those charged with the operations of the lending program are very commonly feeling like I'm throwing, or more like I'm standing on this side of the fence. Someone's throwing something over to me, and I'm going to do my very best to try to catch it. But that's how it often feels. There's always, this almost works. This accomplishes 80% of what I need to do, and there's no idea how we're getting the other 20% in. And that's true. I mean, what I would say is most people are going to always feel that way. There's something comforting about the idea that not only was this done, not only was this built by people that do this day in and day out, they also have to use it day in and day out, right? And so when you're combining an end-to-end approach to that, it's people that work together, working in a lending program end to end with a view, and always, if I'm bringing it in this way, and if I'm making these changes at origination, how am I impacting? What does that do to impact how this loan gets serviced? And then the technology itself, it's like, as we ourselves are using it the entire time, we're also being able to give direct feedback. So it's sort of it keeps everybody honest on it. If we don't find it pleasant to use, why would anyone else? And so it's just a great deal of confidence you can put in it that we really care about making sure that we're thinking all of that through all the way to the end. Because the point of it, at the end of the day, you've got a bunch of very, I guess I'd say people that are passionate about SBA lending, but passionate about lending, passionate about small businesses. They're looking at that, and so to us, this is a means to do that even better. It's a means to that end, not just like I said, I think I said it this way. I've never known anyone who did SBA on purpose. It's one of those things that you sort of discovered along the way because you either find a deal you couldn't get done, or you heard it from somebody else and you thought you'd give it a try. And at that point, you got to be sort of a special kind of temperament to do it, because it's extra steps. It's something that is somewhat, there are extra things involved to do it, but the reward side on it, when you feel like you're getting to be a part of something that you're proud of, that you go home and like, I helped in some small way to be able to put this in place, and you see a store that you went and looked at, there's a site visit you completed, or just whatever the case may be. There's lots of little ways that feel tangible to you that you somehow helped your community. And when you're doing that, this all comes back to, it's a group of people that have that same passion with you. They share that with you. It's important to make sure that we're helping set you up so that you can focus on the thing that only you can do. And that's where you talk to your customer. You bring in that opportunity. You help them say yes when you would have had to turn them away otherwise. All of those pieces together. And then I think that's how it all comes together in my mind.
Yeah, and I like that. Just before I hand this back to Tim, kind of comes full circle to the comment you made at the top of our conversation about banks are in the business of managing risk. That is the name of the game. And when you think about what a truly end-to-end platform makes possible, it is furthering, their ability to manage that risk. And so I know that there's, and now we're talking, whether it's an SBA loan, a conventional loan, it really doesn't matter. I know there's a tendency, maybe, that's the moment to spike the ball, I guess, when the origination team originates a loan. But the critical part of it is the long tail, the servicing of that loan, and having
really just started,
correct, that set of activities be permanently nested right there next to the information that was part of the original origination is really going to be a game changer. So I'm thrilled to be here at Lenders Cooperative. If you want to be in a hot sector of fintech, this is it. And I'm grateful to be here because this is going to be a lot of fun. Tim, back to you.
Christopher and David, that was fantastic. Thank you. That was intriguing. It was interesting. Very well done. I appreciate that. We do have one question here. Let me read this for you that came across. It says, in terms of sharing tools, is there a checklist and or a sample SBA lending oversight policy that can be used by a bank when registering as an SBA lender that you would be able to share?
Dave, you want to take it?
Yeah, so there's a number of things that would assist in that. One of them is, so obviously I mentioned this 467-page document, right? So that's the SOP, and I'm sure that's not what was being asked there. So when it comes to starting as a lender, there's actually agreement that you complete, and you meet with your local SBA office to kind of go through that process, and that is their function. They very much want to meet with lenders, help them get started. There's a series of like application checklists. You can look at basic loan closings. What are the documents? And there's short form versions of that SBA already has available. That again, your district office would be able to readily provide to you. And then when it comes to sort of an oversight policy, there is a regular communication that you can get from the Office of Credit Risk Management, which is that sort of auditing body within the SBA. And another one I would plug is SBA has a training and demand site that kind of pulls all of this stuff together for you very, very easily. And so just in a wrap up, I know we had said that we would send out some information. I'd be happy to drop some of those links in there so that can be easily found. And so you can search from there. And what I would also say is that we have other resources that we'd be happy to talk with you over if you want to reach out.
Okay, that's great. Thank you. Well, I definitely want to thank today's speakers. Chris McClinton, the president of Lenders Cooperative, David Tinsley, for their expertise and insight into why SBA lending should be strategic. They are premier partners of the ABA, so you can always reach out to the ABA or go to aba.com and you can find all the information about Lenders Cooperative there as well. As I mentioned in the opening remarks, all attendees will receive an email with the recording of this webinar, and you can expect that in a day or two. So this concludes today's ABA webinar. My name is Tim Pannell. Thanks for joining us today, and have a great week.